Less building now could mean higher rents in the future for office space. Elliot Brown joins us now with the story. Good morning.
Morning.
Hey, good
So
morning.
you're telling us that our employers are going to have to pay more for office space. Does that mean they can't pay their workers more?
Potentially. So what's happening is right now, for the past 3 years, we've seen the lowest levels of office construction since 1960 at least, which is when they started keeping records.
And by a significant margin. I say it's not like we just barely missed. We're well below those lowest levels.
Right. We're about 55 million square feet were started last year. That's about 20 Empire State Buildings, which across the country is not a big amount. I mean,
Yeah.
5, 6 years ago, I think we were doing 4 or 5 times as much. In the 80s, we were doing, 6, 7, 8 times as much. So it's like a very low level. The problem is, office is very boom bust. And so today, we don't need office space. There's high vacancy. People aren't adding that many jobs. 3 years, probably need office space.
But isn't it the case that the boom bust cycle means that the properties that were built in the 80s during the boom and the 90s during the boom, and this boom, as you say, where we saw so much construction, basically the only way for those big, huge things to get done in finance is during a boom. And then don't we basically spend the next however many years catching up with them and filling them up?
Yeah, that's exactly what happens. But then there's this kind of lag in between when you actually start building again. So, by the time a bank is ready to say, let's put money into this, it's probably too late. And then you spend the next 3 years watching your rents skyrocket because you've run out of space.
But if we go back a little bit, and we go back to 2008 that Kelly alluded to at the top of the show, everybody, and already residential real estate was in the tank, and everybody kept saying, commercial real estate is next, and said
It's the next shoe to drop. How many times did we hear that?
Next shoe to drop, next shoe to drop. And as you say, obviously, new construction slowed dramatically by the time we get to the last year. But what happened that it never collapsed in that dramatic way?
That's a problem with the. Problem might be the wrong term because it didn't blow up,
Right.
but that has to do with the banks. I think everyone thought that the banks were suddenly going to have to, like in the 80s with the S&Ls, suddenly have to realize these giant losses, and banks would close left and right. And
now extend and pretend has become the unofficial mantra of the
right.
sector.
So what banks can do is have a loan that's actually worth X,
Right.
but then they just keep it on the books
They don't
at
take
2X.
So it was really the bank inaction that prevented banks not taking action against borrowers who were in trouble that kept a widespread
Well, and that's
collapse
why
from
we hear
happening.
even Mitt Romney on the campaign trail talking about zombie banks, how we don't
Right.
want to be like Japan. We got to force these banks to realize these losses. Elliot, what would that mean for commercial real estate?
That would mean you'd have a lot of people getting foreclosed on even more, and you'd have a lot of losses, and property values would come down because banks would have to sell this stuff at what it's actually worth instead of just keeping it on their books.
And that maybe would be a big break for employers looking for space. It is interesting because we're in this period where, as you say, the vacancy rate is still high. It's just that the conditions could make this ripe for some tightness in a couple of years' time. Is that now in the past, has that happened where employers have suddenly faced like double-digit rent increases?
So that's the history of office space is that we saw it in '07, we saw it in 2000. You have these spikes. So it's a very inefficient market because you'll plot along going where rents are kind of growing by 2-3%, and then when things actually get really tight, which is the exact time that people start building,
Right.
then the rents go up 10, 20%. In New York, it was 30%.
As you point out, it's a pretty inefficient system. Somehow the market hasn't gotten its act together in that area.
Well, it's why economists hate it. They're so sticky. Big buildings are sticky. Leases are sticky. These are all things that don't move immediately when market conditions change, and so they cause these inefficiencies.